Very good morning. Welcome to Chartbusters. Well, this is the show where we highlight all the buzzing stocks of the day. We have started off on the back foot. We have a truncated week. But for today's first 90 minutes, it's not looking good at all. The Nifty is under pressure. We're down close to around 90 points. The Nifty Bank was up 450 points in Friday's trading session. It's given back close to around 85% of those gains. And that's the contribution chart that's up for you on the screen. Close to around 30% of today's fall is just on the back of the losses that we're seeing in Yes Bank. Maybe we can pull up a contribution chart even of the Nifty Bank, given that the stock is down close to around 26-27% as we speak. More than 50% of the losses are on the back of only Yes Bank. Well, Mangalam, it's sad sentiment as well. If you're looking at some of the top losers, they're from the banking and financial space. India Bulls Housing Finance, you have IndusInd Bank as well, is under some pressure. And, let's see whether or not we can defend maybe that 11,650 mark.
Absolutely. The 11,650 mark also coincides with the 20-day moving average. Let's see whether we defend that or not. Another important thing or interesting thing that we're seeing is that as the markets are correcting as far as the financials are concerned, we're seeing some purchase in the erstwhile defensive. So be it something like a pharmaceutical stocks or IT stocks, they're in the green. And all the FMCG stocks, they had been underperforming for a while now. And now they're seeing some interest as well. So be it something like Asian Paints, HUL, Dabur, or even Marico, all those stocks are fairly in the green and seeing some bit of purchase. So let's see how that comes about.
Yeah, that's what, Mangalam. And we're talking about the frontline indices. Just take a look at that. Everyday industry is down close to around 20%. With that, you have the other clutch of stocks as well that are lower. Something like a McLeod Russell as well is down nearly around 16-17% the last time I checked. So the entire promoter group is getting itself into a bit of trouble now. In fact, McLeod is almost at the low point of the day. And this really sour sentiment even in the mid-cap space. If you're just pulling up the advanced decline ratio, you'll see that only 350 stocks are advancing. More than 1,500 stocks are on the declining end. And that, in fact, is getting a little bit worse. So I'll keep an eye out on that front as well. For the time being, though, Mangalam, let's go through the top stories.
Absolutely. Let's take a look at all the top stories that we're tracking. And the topmost story, of course, is Yes Bank. Stock cracks over 26%. On a dismal set of fourth quarter earnings. While brokerage commentary is poor, the management is confident of maintaining credit cost guidance of 125 basis points for FY20.
And Hero MotoCorp slips on weak results. The margins declined for the fourth quarter. The management says that volume growth will remain challenging in the first quarter of this fiscal.
Oil marketing companies, they gain as crude oil slips below the $72 per barrel marks. They are seeing some purchase.
And Reliance ADAG stocks, they slide as CARE downgrades instruments of Reliance Commercial and Reliance Home Finance. ICRA too cuts ratings on Reliance Capital's commercial paper. The entire group of stocks are down roughly around 5 to around 15%.
And as a result of that, the entire financial sector underperforms. Stocks like DHFL, India Bulls Housing Finance, L&T Finance, IndusInd Bank, Bank of Baroda, all of them taking a hit.
Okay, how do you trade the Nifty from here? A couple of these stocks from the frontline indices, the IT names like Mangalam was mentioning, they're trying to put in a bit of a fight. We're holding it around 11,665 odd. What is the trade from here? Prakash Gaba is with us in the studio. Prakash, tell us, how would you trade this Nifty? Are we breaking down? Do you think we can go back to around the 11,550 odd?
What I'll see is that what last 4 days we have session is up move, down move, sideways. But the previous last Thursday that we have seen, that bar is a very negative bar. So it tells me that unless it takes out the high, we must assume, I've been maintaining that it's down. So I would assume that the move is down. In fact, today's bar also is an outside reversal bar. So I would say that it is weak, looks weak, and possibly we could see 11,600. If it goes to 11,500, like you said, possible. That may take a couple of days for so. But looks like today, even today, 11,600 is a possibility.
For the last many days, Prakash, you have been telling us on this show itself that 11,790, 11,795, that's the mark you look at. You'll get bullish only if the market decisively breaks out above that level?
Correct. Absolutely. Unless it takes out the high and proves it to me I'm going up, I must assume it's down.
All right.
It may be sluggish, it may be fast, but it's down.
Okay, before we get to your individual stock ideas, Prakash, there's some news coming in on 63 Moons. The Supreme Court has set aside the NSCL 63 Moons merger proposed by the government, and that is reflecting in terms of a positive sentiment for 63 Moons, which is locked in upper circuit. In fact, over the last couple of months, we have seen that stock buzz around quite a bit. So pull up a 3-month chart or a 1-month chart itself will tell you the entire story, that how much of it was perhaps expected by the street or not. In the last 1 month, the stock has gained a fair amount. The chart should come up for you. Currently up, locked in upper circuit as the Supreme Court has set aside the merger. Yes, last 1 month, stock up 55%.
I think we'll get Ashmit to give us, some more details on this. Mangalam, just a quick background. NSCL, there was those outstanding claims of more than 5,300 crores on. Then, in fact, the government had gone ahead and proposed a merger. So, if that was to be, then, in fact, this listed company, 63 Moons, that's the erstwhile financial technologies, would be under pressure. The very fact that, as we understand right now, that this order has been set aside, it's good news for the 63 Moons, because that liability of 5,000 crores odd sticks with NSCL, and the merger doesn't have to really take place. So we're waiting for further details on this. But as things stand, it looks like it's a relief that's coming for 63 Moons. It's good news for them. I think the street was sensing it in the model itself because that stock was up close to around 10%. In fact, let's get in Ashmit. Ashmit joins us on the phone line to run us through all the details of which are just coming in. Ashmit, fill us in.
So what we understand is that the Apex Court has answered this question that goes back nearly 6 years. The question essentially was that the NSCL that went bust, that had seen irregularities worth 5,600 crore rupees, can there be a case made out for merging NSCL with its parent entity owned and controlled by Jignesh Shah, FTIL, now known as 63 Moons? Is that possible? Is that workable? Now, the question that arose is because in July of 2013, the government had passed order. I beg your pardon. In February of the government had passed orders whereby they had made clear that their understanding is that they cited public interest, that given the public interest, they wanted to merge the MCA, the Ministry of Corporate Affairs wanted to merge NSCL with the parent company FTIL, with the primary intention that the liability of 5,600 crore rupees that is lying on the books of NSCL will then get transferred to the parent company, Jignesh Shah. Now, this was something that was fiercely opposed by FTIL, now known as 63 Moons. They opposed it severely before the Bombay High Court, but they met with little success. In December of 2017, the Bombay High Court had in fact upheld the MCA's order, asking for the merger to take place, and then subsequently the action shifted here. Today, what we have here is that the Apex Court has squarely quashed the government order which had directed for the merger to take place between the two entities. That has been quashed. What that effectively does is that it protects Jignesh Shah owned and controlled 63 Moons Technologies from that liability of 5,600 crore rupees. And this is the highest court of the land. So now that becomes the norm, that becomes the law. So he stands protected. Jignesh Shah owned 63 Moons now stands protected against.
The number you have dialed does not exist.
We got the sum and substance of what Ashmit was saying, that the liability of 5,300 crores is not likely to be paid by 63 Moons. So that's as far as this story is concerned. I think with that we'll move on. A couple of stocks, they are losing steam as we speak. Berger Paints is at the low point of today's trading session. And a lot of these Wadia Group stocks, they're not doing too well as well. We have Britannia at the low point. We have Bombay Dyeing. That's the one that should come up for you, down about 13%, and with huge volumes. Volumes are we're just 1 hour into trade, 1.5 hour into trade, and the volumes are 2.5 times what we've seen in the last 10 days. So we'll keep an eye out on this. Also watch out for the holding company Bombay Burma, which is lower by about 2.5%. Talking about individual stocks, Prakash, you have your stock picks remaining. What are you trading?
That's right. Yes. I think Indiabull Housing looks weak to me. The way today we have seen some massive selling out here. Possible Indiabull Housing can see a slide to maybe around 650 zones. Stop about 720 should be fine. Again, Torrent Power also is looking weak. Massive selling seen here as well. Possible target on the downside 240. Stop about 252.
Do you have a word on Bombay Dyeing? Because after today's fall, the stocks actually turned negative for the year.
Yes, it is weak. I think the target was 100, the recent low that we have seen. Possibly we could even breach 100. That's a possibility, because when I see the move between 185 to 150 looks reactive in nature. It basically means I've gone up, but gone up to come down. Possible we'll see lower levels in the days to come on Bombay Dyeing.
Any disclosures, Prakash?
None of the three stocks discussed today on the show.
All right, we'll look to chat with you in the next couple of hours as well, Prakash. Well, let's move on then. HDFC Life reported a good set of earnings in the fourth quarter, but valuations continue to remain a bit of a concern. Yes, Shane caught up with Ms. Padalkar, the MD and CEO of HDFC Life Insurance, and began by asking her the company's expectation for premium growth in the coming fiscal. That's FY20. Let's hear her out.
As an HDFC company, smooth upward curve is what we've always said in every metric. So no reason why we should not grow
to
about
quantify that smooth upward curve.
2 to 2.5x GDP. So something in the range of 17 to 20%.
Okay.
It should not be an unreasonable ask.
Okay. As far as, of course, the VNB margins are concerned, help me understand what was the improvement which you saw on the VNB margin front on a full financial year basis, FY19. What was the growth standalone when it comes to that particular number?
Yeah, so that number grew on a standalone VNB basis of 20%.
Okay.
So again, a very healthy growth of just the VNB. As far as the margins are concerned, it was 23.2% that went up to 24.6%. So there also there was a significant margin expansion.
Correct. 24.6% of VNB margins. I mean, we've seen a significant improvement as far as VNB margin for HDFC Life is concerned. But in your understanding, it's again margin, it's again the same business that you're acquiring. Where do you see a peak in terms of these margin performance?
If I were to take a leaf of China's books, I would see the margin trending all the way upwards to no reason to believe 30% down the line, and I'm talking slightly longer horizon, because it's a function of how much do you sell of the 3 tenets of protection.
Correct.
And there is a long runway as far as India is concerned.
Correct.
On the back of product innovation, which is what we are known for, we expect to capture areas that don't exist today because that product offering doesn't exist today. And a good example is what we have managed to do on Sanchay Plus, which is a flagship product that we launched around mid-March, and in a period of just 15 days we managed to garner 250 crores of premium. Correct. So it's that kind of a thing wherein the product offering meets the needs of what worries people. Correct. Whether it is in the field of longevity risk, or it is in mortality or in morbidity, one of these 3.
Correct,
and that will propel the margins to continue to climb upwards.
Upwards. What kind of addition do you see coming from the addition that you made in the term business this year, this financial year? What kind of addition do you see on the margin front? How do you see that reflecting in the coming financial year? If you could quantify that for us.
Yeah, so the margins that go up should go up at least from the current 24.6 to about 20 basis points up. It should go up just because of selling more of term and longevity risk annuity products.
Well, on that note, we'll slip into a short break. You come back though, we'll focus on the big loser on the Nifty today. Yes Bank, that stock is under pressure after reporting a dismal fourth quarter set of numbers. Stay with us.